Going to tackle this morning on Canadian Mortgage Weekly, episode 160 is: have we hit peak interest rates in Canada for 2023 and possibly beyond? My name is Joe Bladek. I'm the host of Canadian Mortgage Weekly. Looking forward to discussing this topic with you today. And I have some really interesting data to share with you today, because what I've done is I've put together what the other lenders in Canada, the big six banks, are saying about interest rates and what's going to happen on October 25th when the Bank of Canada does meet again to discuss interest rate policy and set a new interest rate going forward. Will the Bank of Canada actually increase rates by another quarter point or possibly a half a point come October? I know that inflation is up again, so it's quite possible that that could happen. And what I wanted to do, though, is actually look at what the banks are saying, the big six banks in Canada. Each one of these banks has their own economists, and they've put together a report, saying as to what's going to happen with the interest rates going forward in Canada. Will they go up? Will they actually come down? Will they stay the same? So before I get into that, if you're just joining me now, make sure you follow or subscribe to my channel. I do a podcast weekly at 11:30 on Thursdays. This is episode 160. We've been doing this since 2020 when COVID started. It seems to be helping a lot of people with their home purchases. So getting into what banks are saying now for interest rates, there have been a number of conflicting reports. So what I'm going to do is, if you're following me here on LinkedIn or Facebook or Twitter X or YouTube, you'll actually see on the screen what I'm going to be putting up here. If you're following me on Instagram or TikTok, please be patient. I'll try to explain what I'm saying here while I'm doing it with you all today on my episode of Canadian Mortgage Weekly. So getting right into it, I'll just share my screen here so you guys can all see. Let's see what we got here. All right, so what I want to do is just we'll go over each lender and we'll see what they're saying. We'll start with TD Bank. Anyone want to take a guess? What's TD Bank saying is going to happen on October the 25th? Will we see interest rates go up? Will we see interest rates stay the same or go down? Well, what I'm going to share with you here. There we go. So TD Canada Trust, they are saying that interest rates will actually, based on all the data they're seeing, and considering the fact that inflation has gone up in the last month to over 4% again, and considering all that data, TD Bank is actually saying that the Bank of Canada is not going to move interest rates. The Bank of Canada is going to stay put where they are at now with interest rates going forward and not move interest rates up, but keep rates the same. It's an interesting view from TD Canada Trust because they're usually a little bit more conservative than other banks. But here we are. We're seeing that they are actually saying that the Bank of Canada is not going to increase interest rates on October the 25th. What do you guys think? Is that the same thing you're thinking as well? I know that there are pressures from the economy right now. We are seeing a little bit of job loss here and there. We're seeing some layoffs. We're seeing some different aspects of the economy shifting that are outside of inflation. People can't afford their mortgages anymore on renewal, and that's becoming a real big problem. So TD Canada Trust on record saying that they don't think rates will go up on October the 25th. They actually think rates are going to stay the same for a little bit of a long period there where they are at now to combat inflation. Everything is absolutely crazy. Thanks for my viewers there on TikTok with your comments. So what we have here is, let's get into the next lender. We're going to take a look at RBC next. Does RBC think that rates will go up on October the 25th? Do we think that rates will go up a quarter point or a 0.5% or a 0.75%, a point or 1.0%? Well, let me bring that up on the screen for those of you who are watching on LinkedIn, Facebook, YouTube, or what's the other one? LinkedIn, Facebook, Twitter X. So RBC also, they believe that rates will stay put on October the 25th. Their report actually says the same sort of thing that TD Bank is saying. The economy is actually a little shaky right now. Interest rates have gone up considerably, and because of that, they are saying that Bank of Canada will keep rates where they are at now for the next foreseeable future while we combat inflation. Neither of these banks have said anything about rates coming back down. As a matter of fact, I don't know if we'll see that today. A lot of lenders are saying that rates are probably high and higher for longer and here to stay. That rates won't actually be coming back down, that we should actually be prepared to accept where rates are at now for the foreseeable future and beyond. And this will be sort of the new baseline as to where things will go from, instead of that 1% or 2% mark where we were at before. And that no longer will be the baseline as to how we can move forward from there. Sorry, Mr. Barnacle Man on TikTok. I don't know who that person is. So let's look at what Scotiabank is saying next here on Canadian Mortgage Weekly. I have also been able to get some information on what they are saying. But I don't know who that person is. I'm sorry, on TikTok there. Thanks for asking, but I don't know who that person is. So probably never thought about them at all. So Scotiabank, what are they saying here? Scotiabank is saying that rates are going up on October 25th. What do you guys think about that? Scotiabank actually thinks that we need to battle inflation a little more, that the Bank of Canada does need to increase interest rates further. And Scotiabank's report is saying that interest rates will go up on October 25th by about a quarter basis point. That would effectively bring prime rate from 7.2% right now, where it's at, for a prime rate for a mortgage in Canada, to 7.45%. Scotiabank on record saying that rates will still go up on October 25th, that the Bank of Canada is not done battling inflation as of yet here in Canada. Rates to go up on October the 25th. So far we have two banks against rate increases on October 25th. That would be TD Canada Trust and RBC. One bank for a rate increase, and that is Scotiabank. We have three more banks to review and their reports. We're going to get into them in just a moment. But what do you guys think while we take a break from looking into these? Do you guys think that rates will go up a quarter point based on what we're seeing from these other three banks and what they are saying? TD thinking that, rates are probably here where they are at, higher for longer, but no more rate increases. RBC, no more rate increases. Scotiabank, we're not done increasing rates. We still have rate increases. As a matter of fact, we're going up on October 25th. What do you guys think? We'd love to hear your perspectives on this. And as we do that, let me just get into, let's look at here. Let's look into what the inflation numbers are at in Canada just before we get into these other lenders here. Inflation numbers in Canada over 4%, 4.0% right now, actually. So that is an increase from 3.3% in July. And with inflation going from 3.3% in July to 4% in September, all the way from 2.8% in June, that represents almost a doubling of inflation since June of 2023. That's a significant amount. So I could see why Scotiabank believes that we will see a rate increase in October on the 25th. Let me show you my inflation chart while I have it here. So as you see here, we can see that inflation did go up here from 2.8% in June to 3.3% in July, and then 4% in August. If you're watching on LinkedIn, Facebook, YouTube, or Twitter, you can see this chart. So I'm showing the chart here. You can see a steady increase of inflation. And Scotiabank thinks that because of this, we are to see the Bank of Canada increase rates further. However, if we look at what TD Bank is saying, they're looking at it from a different angle. They're looking at it from an angle where, we see that overall inflation is down from a more zoomed out view. Inflation is down because we were at, 8%. And you can see here inflation's overall down, and that the overall trend is going down. So it's not the immediate numbers that we are concerned about, but it's the moreover the trend that they are looking at here with regards to inflation. So let's look now at what the next bank thinks will happen with interest rates come October 25th. Because the question today we are trying to answer is, have we hit peak inflation? Thank you. Yes, it is a word salad. If you don't care, keep moving. So if you look at this, we have TD Canada Trust not changing mortgage rates, RBC not changing mortgage rates, and Scotiabank increasing mortgage rates. Hit the gym. Well, I did yesterday. Got my own home gym here, but for today, not happening yet, because obviously I am here educating you all on interest rates. So look at this. CIBC, well, they think that rates are going up. Well, CIBC does think that rates will stay the same on October the 25th. They don't believe rates will go up at all, and they think that overall inflation is trending down as well. If you think that inflation is trending down, let me know. Right now, inflation is at 4%. Because inflation is at 4%, that is a lot higher than a lot of other people want, especially with it being so high. Food is just crazy right now. I can't believe it. So with inflation where they're at, CIBC actually thinks that rates will not go up on October the 25th, that actually the Bank of Canada will keep rates where they are at now. And they think that rates are at where they are at now for the time being, and possibly higher for longer. So that goes along with what Jerome Powell was saying in the United States, actually back a few weeks ago in September, when they announced that the US is not increasing interest rates on their end. The US actually made a remark saying that they are not increasing rates, that they are anticipating that rates will stay higher for longer to combat ongoing persistent sticky inflation. So with that in mind, that could actually happen in Canada as well, where the Bank of Canada, Tiff Macklem in particular, decides that he wants to keep rates where they are at now, higher for longer, to help combat inflation over the long term. All right, so let's look at what the next bank is wanting to say is going to happen. National Bank also saying rates are going to stay the same in October. So how does that go with you guys? So far, we have 4 banks saying rates are going to stay the same. 1 bank, rates are going up in October on the 25th. So that is quite a disparity. So far, Scotiabank is alone. And let's see here. We got one more bank. We got BMO here. Let's get right into them and see what they think is going to happen. All right, BMO. Rates staying the same. So there you have it, everyone. If we look at all the big 6 banks in Canada, have we hit peak interest rates? 5 out of the 6 banks say we've hit peak interest rates. That those banks believe that the Bank of Canada is done increasing rates, that there's no decreases coming anytime soon, but that we are to see a hold of higher interest rates for a longer period of time. And that this could be the new baseline that a lot of home buyers and homeowners should reflect their home purchase decisions off of. The baseline being the current rates and where they are at. And where is that? Well, 7.2% is the current prime rate in Canada. So if you're getting a mortgage A variable rate, a fixed rate mortgage, if you ask that bank, your bank, what is prime rate? That prime rate is considered to be a very good rate in comparison to a lot of lenders out there. That is 7.2%. So 7.2%, when I'm speaking to clients about rates, when I say 7.2%, I get shock, I get anger, I get, why is it that high? I should be able to get a better interest rate. Well, yes, that's the best interest rate you can get on a great credit score in terms of a prime rate. If you're getting a variable rate mortgage, typically a lender will offer you a slight discount in relation to the prime rate. And when we look at that discount, that's usually half a percentage discount or a full percentage discount. And if that happens, you will have 7.2% minus, say, 1.0%. So your overall effective rate can be 6.2%. But it's always still based on prime rate. So if prime rate does end up going up on October the 25th, as Scotiabank is predicting, that prime rate will go from 7.2% to 7.45%. And if you have a rate of prime minus 1%, then your interest rate will go up to 6.45%, up from 6.2%. So that's the report on the big 6 banks in Canada. 5 out of 6 believing rates are staying where they are at for the time being, that we have hit peak interest rate, and that Scotiabank thinking that we have not hit peak interest rate. Their belief is that rates will go up come October the 25th. So we'll have to see what happens. There is still, I believe, a 50-50 chance going into the October 25th Bank of Canada interest rate announcement. If you are interested in the Bank of Canada interest rate announcement, please join me and my mascot interest rate on this channel for Wednesday at 9:45 a.m. for a live episode of the interest rate announcement, where we will actually cover off the interest rate announcement, release that data, and go over some of Tiff Macklin's high-level comments here on Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast. So looking at what else we have here, I wanted to cover off the 3-month interbank rate with you all. This is a rate that I use to decipher whether or not variable rates are a competitive option in the mortgage market in Canada. And looking at this, we are at 5.53%. That is steady since about the middle of July. And what we have there is we have steady interbank rate, meaning that variable rates really haven't changed in competitiveness since July. And based on the fact that the variance between interbank rate and prime rate is less than 2%, we can see that the current variable rate is not very competitive in relation to the fixed rate. Looking at the Canadian inflation rate, we do see it's at 4%. The new inflation numbers will be released in 12 more days here. Will be on October 17th. October 17th will fall on a Tuesday, so we'll have those numbers for the rate announcement on October 25th, and also for the live episode of Canadian Mortgage Weekly that will come out on October the 19th. Fantastic. Okay, looking at what else we have here, the 5-year Canadian bond yield. I track this to determine whether or not fixed rates are a competitive option in Canada, where they are headed, and what we can expect the banks to come out with as the bond yield makes its changes. And the bond yield right now in Canada is sitting at 4.308%. That is a slight decrease from yesterday. However, we have seen the 5-year Canadian bond yield on a little bit of a rip. It's been going up quite considerably since it's hit a low point at 3.8% in September. And since then, it's now hit a peak of 4.415%. Such a peak. That peak wasn't hit over the last 25 years. I can't even believe it. It hasn't been that high since since the 2000s, maybe the 90s. So quite high of a bond yield there that we are dealing with in Canada. And in case you're wondering what the 5-year Canadian bond yield has anything to do with mortgage rates, well, the fact that the 5-year Canadian bond yield is what banks use to price their 5-year fixed mortgage rates is exactly what it has to do with mortgage rates. The bank makes the spread between what the bond yield is at and what they're selling you their 5-year mortgage rate at. So with the bond yield sitting at 4.3%, we can expect bank interest rates to be in the sixes right now, because usually they are adding 2% to that bond yield for their spread. All right, looking at the American inflation rate, do we have the recent numbers for September? I don't think so, not yet. Looks like those are coming out on October the 12th. So we'll have those in 7 more days. October the 12th will be actually the day that we are airing the next episode of Canadian Mortgage Weekly. So we'll have those numbers here for you on that day. Hopefully we can see what's happening with inflation and give you some more guidance going forward. But inflation in the United States has gone up 3 months now, 3% in June, 3.2% in July, and 3.7% in August. Mind-boggling. And with inflation going up 3 months in a row in the States, 3 months in a row in Canada, will it go back down? Who knows? We'll have to see, looking at September's numbers when they come out in just a week or two here for Canada and the US. Jobs report. American jobs are actually, there's more unemployment in the United States, as I've seen this morning. In Canada, we don't have the unemployment numbers out yet. But in the States, unemployment is at 3.8% compared to 3.5% last month. So an increase of 0.3%. So quite a large increase in the last month. We'll have to see what happens next month. See if this trend continues. That could indicate some more pressures on keeping rates where they are at. And if we see a large amount of job losses, we could see rate cuts in the future. But right now, no lenders are predicting rate cuts. No one's predicting rate cuts this year at all at this point. 2023 will not be a year where we see any rate cuts here in Canada. We will probably end the year off with high interest rates. Can't believe it's already October. I mean, we have 3 more months until the end of the year. What's mortgagedashboard.ca actually predicting is going to happen? Well, they are predicting a 33% chance of a rate hike the next meeting. So a third. And looking at a rate hike in the next 9 months, we do see a 83% chance of a rate hike in the next 9 months. So that is quite a significant number, 83%. October 26th, saying that the next rate Bank of Canada meeting is October 26th on the mortgagedashboard.ca. However, that is incorrect because that is a Thursday. The Bank of Canada does not meet on Thursdays. They meet on Wednesdays. So they've made an error there on reporting the next Bank of Canada interest rate announcement date. So just an FYI there, Mortgage Dashboard, there's an error on your website. Looking at your average house price in Canada, we're sitting right now with an average house price of 600. No, not 668. Again, that is old information as well. Let's see if we can find the new information. Okay, so the average house price in Canada currently sitting at $650,140. So with the average house price still over $600,000, it's really hard for anyone in Canada to afford a home. What I'm noticing right now on my end is that anyone who wants to buy a home on their own, even if they have money saved and no debt and a good salary, everyone needs a cosigner right now. No matter what, it's really difficult to buy a home on your own unless your income is $180,000 and above. Because without $180,000 in income, you will need a cosigner to buy the average home in Canada. And usually, even with two income earners plus Canada Child Benefit, we are still not hitting $180,000. So, quite often, we'll need to see a third person on the mortgage application. And then, when we have three people there, each making, say, $50,000, even sometimes that's not enough because that only adds up to $150,000, and we'll need a fourth applicant on title. And that's why we see a lot of these folks that are immigrating to Canada right now being able to buy a home right away. A lot of these folks are coming over as an entire family. So that entire family comes over with mom, dad, son, daughter, grandma, and grandpa. And then when they all come to Canada, they are all very eager to work and they all get jobs right away. Along with the money that they've brought from their home country, they are able to use their jobs and their income from their new jobs to be able to afford a home and be able to get into that home without any issue, because they are able to do that using, say, 5 or 6 incomes. And if you're making minimum wage in Canada, let's look at this here. It's very surprising. But if you're making minimum wage in Canada and you're a new family to Canada, minimum wage, I think, went up to $16.55 just the other day, 40 hours a week, 52 weeks a year. And then you are a family of 6. Well, if that family of 6 is making full-time minimum wage, the 6 of them together can easily buy the average price home in Canada, because this family just wants a place to live and they don't want to rent. So a lot of these families, they come over to Canada, and what we are noticing is that the single or dual income earner family right now in Canada is competing directly against the 5 or 6 person working immigrant family that is coming to Canada that wants to buy a house as well. So when you have a 5 or 6 income immigrant family competing against 1 or 2 income individuals trying to buy a family for their home for their family, it becomes an unfair advantage that the people that are trying to buy a home with the 6 of them have. And I can go as far as even saying as that it's not even an unfair advantage. It's a selective advantage where they have that lifestyle and they are able to make sacrifices with their lifestyle to be able to buy a home. So in Canada, it seems like the direction that we are headed in is, if we want to buy a home, we almost need to get the whole family on board to be able to buy that home with everyone on title together and living under one roof. And then that family then can build their wealth to the point where they can branch out and buy a second home where that family can then break up from there. But maybe first-time buyers, maybe that time is dead where the first-time buyer buys their first fixer-upper home and moves from that point on. Maybe the next point is the family buys the home together, and then we move from there, and we move from that point to the fixer-upper home by yourself. It's a step before the first step that has been created now in this market. What do you guys think? I'm interested to know your opinion on that. And if you're just joining me today, have we hit peak interest rates in Canada? What I covered off here today on Canadian Mortgage Weekly is the fact that the big 6 banks have come out with a prediction as to where interest rates are headed on October the 25th. RBC, TD Bank, BMO, National Bank, and CIBC all saying that rates are not going up on October 25th, and Scotiabank saying that rates are going up on October the 25th. So we have a very difference of opinion from one bank, meaning that what will happen October 25th? Well, a lot of the banks are saying we've hit peak interest rates, and that rates, the way they are at and the way they are now, are here to stay for the foreseeable future until things turn around. If you have any questions or need some help with your mortgage, feel free to reach out. My name is Joe Bladdock. I'm a mortgage broker with 13 years experience. I'd be happy to help you with your mortgage. Hope you have a great day, and we'll see you next time. Thank you for watching Canadian Mortgage Weekly, Canada's only live weekly mortgage video and news podcast.